Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's August 19th. Hope you guys got some great upcoming plans here. Hey, we have a very light day today, so there's no economic news releases scheduled for today. The base and bottom line is stock market's down, and as you'll see here, the bond market is way down. Here's the 10 and 25-day moving average. We closed above it, but today we started below it, and now we're actually even hovering below the 50-day moving average. Essentially what this is basically telling us that with all the talk with the Fed maybe possibly raising rates and maybe even as soon as September, even though there's a Fed funds future rate is showing 15% of a chance of the 15% possibility of a rate hike in September is creating a lot of confusion with a lot of the investors. And anytime you have uncertainty in there, typically that bodes well for the bond market. But today I think they just decided to pull money out of both markets until they figure out what they're going to do here. So because of that uncertainty and confusion as to if there will be a rate hike in September or even this year, they're trying to get some clarity as to what's going on. So when they released those minutes earlier in the week, it seemed like it was split down the middle as to the Fed members wanting to raise rates, and then you got today, you got Fed members throughout this week talking about that they're coming near a Fed rate hike coming near, and maybe even as soon as September. So they're putting in the minds of the investors that possibly September could get it, even though the chances of that are very slim. A lot of other people don't think there'll be one even this year, for that matter. And if there is one, for good measure, they might just do it in December. But that just kind of like last year, where they kept talking about it, but because there's really no good time to do it, and the economy is really not doing that. It's not really that healthy. We're just barely treading water here, and inflation is still relatively low. To be frank, there's really no need to raise rates at this point. But because it's in the mind of the investors and that uncertainty, now basically money is being pulled out on both markets. And today, as you can see here, when the bond market goes downwards, that means rates are going upwards. So we have a worse today. Pricing has gotten worse for interest rates. All right, folks. Money will hopefully be a little bit better day as we go into it. So next week, Friday will be a big day, primarily because we haven't heard from Janet Yellen with all this tough talk. And next week, a lot of the Fed members will be meeting in Jackson Hole, Wyoming, and she's scheduled to talk on Friday next week. So all eyes and ears definitely will be waiting to hear what she says. So up until that point, we could see a lot more volatility as a result of it. Until they hear from her and get more clarity as to where the market should be moving and such. All right, folks. You guys have a great weekend and the rest of your day. And thanks so much for watching. We'll see you guys on Monday. Have a good day. Bye-bye.